Will this make home prices go up? This is the question on everybody's mind. What the heck is going to happen in 2022? And as home prices continue to rise, how can we afford to buy a house, especially as a first-time home buyer? Hey, I'm Tristen Campanella, and thank you so much for watching today on my channel, Living in San Diego with Tristen, where I cover all things about living in San Diego, moving to San Diego, and how to buy and sell a home here. So let's get into it. The FHA recently announced a limit increase in the loans that you can get from the FHA. The FHA is the Federal Housing Administration, and that is a government-backed loan, so you're thinking Fannie Mae and Freddie Mac. And this is allowing homeowners or home borrowers to borrow more money so they can afford to buy a house. The FHA loan limits are based on a percentage of the median home price in each county. So if you're watching this and you don't live in California or you live in a different county than San Diego, click below and make sure you check out the loan county calculator that I'm going to put in the description, because it is different for everywhere in the country. So these government guarantees on these mortgages are really designed to help lower or moderate income borrowers or anybody here in San Diego who might otherwise be shut out of the housing market. But it's not supposed to put taxpayers on the hook for extravagant purchases, so you still need to be responsible when buying a house. The guarantee that the FHA backed and government backed can be pricey. You are going to pay some mortgage insurance for the ability to use that. But guys, think if you are getting a loan for like 3.25%, it might be less expensive for you in the long run to borrow other people's money. And if you continue to get some home equity, you most likely will be able to refinance out of that private mortgage insurance within the first 2 years. So this FHA government loan designed for home buyers who have less money to put for a down payment. And you can also have a lower credit score, sometimes as low as 580. That's because the FHA loans are backed by the government and conventional loans are not. The qualifications for each loan type look incredibly different, so it's important to think about this. The FHA loans are easier to qualify for. They allow for a lower income, lower credit scores, and a little bit higher debt to income ratio, meaning they allow you to carry more debt relative to your income. Now again, I've said this, the trade-off is that they carry a slightly higher mortgage insurance. But if you consider, if you get into the housing market and you are starting to make some equity versus waiting and losing all that equity, is it worth it? Only you can answer that. Conventional loans we'll talk about in another video, but you definitely need a little bit better credit, lower debt to income, and the benefits are less PMI or no PMI or MI at all. So PMI and MI is the same. It's either private mortgage insurance or mortgage insurance, and I will make another video about that so that you can understand what the heck that is. So you're either going to pay this mortgage insurance up front. Most likely you'll have something that's up front that's rolled into your loan. You won't pay it out of pocket, but it's about 1.75% amount of the loan regardless of your qualifying factors. And you'll have an annual payment and mortgage payment that's built into your monthly mortgage payment. So it's not like you're gonna write a check for something else. You're gonna pay one person your payment, but it will add some onto your monthly payment, so you gotta budget for it. If your down payment is 3.5% to 5%, your MIP would be about 0.85% of the loan divided into 12 monthly installments. If you can't do the math, check below and put in a calculator, because I can't do the math right off my head either. The FHA loan limits are set, like I said, in the county level. You cannot borrow up to the limit just because you're getting an FHA loan though. You can only borrow as much as you're qualified based on your income, credit, and what else? Debt to income factors that lenders evaluate to determine whether you can afford to repay the mortgage that you're applying for. So if you can borrow the whole amount, that's huge if you want to, but if you can't because of credit scores and things like that, we can definitely find out what you're approved for, okay? So another thing, we're talking about what the heck is this FHA loan? If you want to buy an FHA loan, you have to have it as your primary residence, okay? If you want to buy a duplex, it's going to be a little higher. The caveat is that if you buy a duplex, you need to live in one. So you can buy a multi-unit property up to 4 units as long as you live in one of the units as your primary residence. I think it's for a minimum of 12 months. So you could live there for 12 months and then rent it out if you want. So here's the good news, guys. The 2022 FHA loan limits are going up in San Diego County a lot. In 2021, they were at $753,250, and they're going up to $879,000. Guys, this is huge, okay? So we can allow people to kind of compete with these housing market increases, okay? You can still get this loan only 3.5% down, and to be able to compete with the rising home prices is phenomenal. So you are now having a wider group of borrowers who are able to qualify for the loans that are backed by Fannie and Freddie Mae, right? And because the market for jumbo loans is so much smaller than the market for conforming loans, jumbo borrowers might need to shop around a little bit more to find a mortgage versus FHA is super easy to get. So then the next question I gotta ask you is, should you borrow that much money? Well, guys, that is up to you. And it is so important for you to review your budget and find a mortgage payment that fits in your life. One thing to consider is that in your early 30s, the odds that you're gonna make more money as you move into your 40s is fairly high. It happens to most people. So you could decide to push the amount of your housing payment a little bit in anticipation for this, but being house poor is not always fun. I have been there, it's not great. So I'm just gonna say this from the heart, really review what you're comfortable paying every month, and remember your housing payment is not only the principal and the interest. So when you're looking at those mortgage calculators, you gotta look at property taxes and insurance, and if you have private mortgage insurance or mortgage insurance, you need to calculate that. I usually recommend estimating a higher interest rate as we're going into 2022 as well, so you're just not shocked when the rates go up, okay? The last week, the average 30-year fixed from Freddie Mac inched up to 3.1, 3.2, and experts are predicting we're gonna rise through 2022. Of course, we have to watch with the new variants out there. So mortgage rates play a significant role in your home search because as the rates go up, your monthly mortgage payment increases. If you're buying a home, directly affecting how much you can afford. And even the smallest increase can have a large impact on your monthly payment. Guys, remember you're going to pay more in mortgage payments each month if both variables increase. So this is not a real number in San Diego, but let's assume you purchased a house that's $350,000 with a 30-year fixed rate loan at 2.86, which was last year, after making a 10% down payment. So according to a mortgage calculator, your monthly mortgage payment, including your principal and interest payments, and your estimated home insurance taxes in your area and the property taxes would be approximately $1,899. That same home could cost you $371,945 by the end of 2022. The mortgage rate could go up to 3.7 based on forecasts, we don't know. And then your monthly mortgage payment after putting this money would increase $2,166. Now, if you divide that by 12, it's not that much monthly, but if you look at it annually, shoot, that's a really nice vacation or down payment on a car. Anyway, it's personal, it's up to you guys. But I really want to stress you have to watch the mortgage payments. And coming into 2022, with all the experts expecting the economy to continue to be solid and housing prices to continue to go up, you will be able to get some equity and get the higher borrowing rate. So sometimes it makes sense to borrow other people's money, and sometimes it makes sense to keep your money in the bank. As always, I hope you found this was helpful. Thanks for watching, and tune in when I post more videos.